And funnily enough, I'm pretty sure our next guest doesn't always want to talk about the stock reaction, but will want to talk a bit more about the numbers. Let's bring in SoFi CEO Anthony Noto. And I'm sure you're going to say, we don't go by the day-by-day fluctuations. What do you make, though, of the optimism originally seen around the numbers? And what more do you want to say to an investor base that maybe maybe will take some profit on the day?
Well, first, thank you for having me. What I'd say is we're really excited about the results that we delivered today. I think they're extraordinary in a number of different ways and equally as positive on the outlook. There's very few companies that are driving durable growth the way we are, plus 25% revenue growth, really strong member growth at 47% accelerated. We had a record number of new members added as well as products, which is a testament to the value proposition that we're delivering. Our profitability continues to improve. We now have all three of our business segments that are profitable, that being the lending products as well as tech platform and now financial services. 67% growth in our absolute dollars on a year-over-year basis from non-lending, and that will continue to be the driver of the growth of the company. And we meaningfully grew tangible book value over the trailing 12 months of about $170 million. So I feel like we're executing across the board on both growth and profitability and shareholder value, and it's just a matter of time before that's reflected in the stock. We just have to keep delivering the way we have been.
Anthony, it was interesting to listen to you on the call. You kind of really talked up the non-lending parts of the business, particularly going into 2024. Are those going to continue to be more of a growth driver for you than the lending business?
That's correct. They've reached the size in terms of their absolute scale where their absolute growth in dollars is meaningful, at 2/3 of the overall growth in dollars, and they're profitable, which means we can now start investing even more in them and have them grow faster than the lending businesses. And so the way we talked about on the call is that I would expect tech platform and financial services to be the driver of growth and lending to be additive to growth, which is the opposite of what happened so far this year.
The interest rate environment is really interesting because some of your sort of technology-focused peers, Lending Club being an example, are struggling. They've gone through a round of job cuts, for example. I look at deposits tripling from a year ago. What is the principal driver of that traction you're getting? Why are you able to perform when similar business models are not?
The thing that we're benefiting from is that we have a great diversification because of our strategy. So our goal is to help our members on all the most important days in their lives and all the days in between from a financial perspective. That results in us having 9 different businesses. Some do really well in a high rate environment. Some will do better in a low rate environment. Right now, the strength that we're seeing is behind our flagship product, SoFi Money, which is the best of checking and savings in one account. We give you all the great functionality that a digital operator can provide, in addition to additional benefits like 2-day early paycheck, and then most significantly, a very unique interest rate at 4.6% APY, no fees, and the ability to get a free certified financial planner and up to $2 million of FDIC insurance. So it's a very unique product. It's helped us grow at the top of our funnel, and then we see great cross-buying from that product as well as others. So the diversification we have is definitely helping. Having both lending businesses and depository businesses are also very unique. And then, of course, our investing business is a great cross-buy product on top of that. One thing a lot of investors don't know in the retail sector about SoFi is we have a third business, our technology platform business, which is leveraging the technology that we use to build SoFi for other partners. There's about 135 million accounts that sit on top of that technology platform. We often talk about it as the fintech of the AWS of fintech because we enable 8 billion transactions a year across that platform.
Let's talk about, in that offering, Connector, the natural language AI-driven, I think it's like an intelligent digital assistant, basically. How much has AI been a driver of getting clients excited of your technology offering?
It's a small piece. As you mentioned, we have a whole portfolio of products in our tech platform, one of which is a chat bot for customer service. It helps reduce the time to resolution and reduce the context per customer. It does leverage AI, natural language AI, in answering the questions that our members have. They really like the product and it improves satisfaction. It's a product we're offering to financial institutions, but we're also increasingly offering it to people that are not currently using some of our other products. So it's a standalone product that's in the cloud.
What you're also offering, and the retail side of your business in particular, is IPOs. Of course, this has been an interesting thing that we've heard, particularly AI-related stories around Arm, which I know that you were helping sell down to some retail investors, but also you're on the Instacart deal and Oddity Tech. How much will the IPO pipeline benefit you, do you think?
The IPO pipeline has two benefits. The first is it's a direct revenue stream, which isn't that meaningful. But what is more meaningful is that this is a unique product that Main Street investors, retail investors, typically do not have access to. So we're giving them access to IPOs at IPO prices, and that helps drive more desire to become a SoFi member, as well as it increases AUM in our invest business. So it indirectly drives the business in a unique way. We want to give our members an opportunity to invest over the long term, and giving them more selection, like an IPO at IPO prices, is one way to do that. We're working on alternative asset classes as well. We pioneered fractional shares. We also offer ETFs and robo accounts. So we're trying to be a one-stop shop, not just overall as a company, but within verticals like investing.
Anthony, last week you sold $100 million of personal loans. You talked about it on the call. Who was the buyer?
We don't disclose the individual buyers. We're very pleased with the demand we're seeing for our assets, especially with the fact that rates are starting to hit a ceiling and would likely come down. We've been able to pass on the higher benchmark rates and higher rates for our loans, and that's providing really attractive yields, especially given the fact that we have prime customers with an average FICO score in our loans in the 750 range, and really high yields. So we've had a number of counterparties that we're now making partners, and one of them, as was mentioned in the call, was from a $100 million deal that will evolve into a $2 billion forward flow. In addition to that, we filed a securitization with BlackRock for $375 million. So a lot more to come on the loan asset side of the equation, but coming at rates that are pretty attractive relative to our balance sheet.
All right, SoFi CEO Anthony Noto, good to catch up. Thank you for joining us on this busy earnings morning.